basically which pairs should you trade. And this is a topic which isn't covered by most educators. I don't know why. Maybe it's because they themselves don't know this. But it's important to know this because, first of all, your strategy, whatever it is, it won't work on all pairs. If you believe that whatever strategy you've read about, you've been taught, works on every pair, every market, and then you start trading the NASDAQ and Bitcoin and all of this with strategies you've learned on forex and you haven't tested them out, you're sure to lose money. So there's certain pairs you should be trading, others you shouldn't be trading. Um, Secondly, you won't be a good trader at all of them. That's why you shouldn't be trading everything. I personally, I don't trade the Euro US dollar because I'm terrible at it. My track record has shown it. I just don't trade it. You'll also find that I don't trade a lot of at all. I don't trade the US dollar at all. If I do, it's the US dollar rand. That's the only one I trade, and then the dollar index. Because you need to know about what's going on with the dollar. The dollar basically moves pretty much everything, so that's important to know. You don't have to learn every pair, and that's important to note, especially for a lot of traders who begin. They feel overwhelmed when they have to do technical analysis and they have to analyze every single pair that the broker allows. And realistically, you don't have to do that. Anything else? You don't have to, again, you don't have to be trading the NAS, S&P 500, the Dow Jones. First of all, if you see a lot of people who trade the NASDAQ and they have like huge lot sizes, I can guarantee you they have lots of blown accounts to back it up. And that's because the NAS, the S&P, and the US 30 or the Dow Jones aren't really made for trading. They're more for investing in the long term and trend investing. So buying at the dips, selling at pullbacks and things like that. It's not for trading on a day to day. I'm yet to see someone who's consistently has a strategy that works on the NAS and the S&P. A lot of people who do well on these indices basically have a long-term hold on them, but it's not buy-in, buy-out kind of strategies. And because they're also more leveraged than currencies, you want to be very, very careful. I personally don't trade them at all. And also, I don't have a track record or strategy that's worked on them. I haven't found books written on them, which gives a consistent strategy. Number two, I think this is number three now. All currency pairs don't carry the same risk. That's important to note because some pairs generally have more spreads, so obviously they're more riskier. Um, and then there's just general market knowledge, which is, for example, buying the pound US dollar is just riskier because most people see it as a short. It's known as the cable, and most people short it. They aren't looking to buy and hold for the long term. So you should know small details like that, that some currencies are more riskier than others. So, and generally, the more expensive the currency is, the more riskier it is. So you'd like to halve your position size when you're trading currencies that are more riskier. Not all currency pairs the same carry the same risk. Yeah. And also there was something important I wanted to say on carrying risk. Okay, yes, not all pairs are equally profitable. I've noticed that the pound pairs are more profitable than the other pairs. That's important to note, especially if you feel overwhelmed. You don't have to be trading everything. If you stick to a few that you enjoy, that are easier for you to trade, that you have track record of doing well, why don't you focus on that and not trying to focus on every single pair? Gold is not the most profitable. That's something else I wanted to tell you because I see a lot of people like, I'm interested in trading gold. And yes, gold is one of the easiest ones. I'll tell you now, if you're a beginner, the easiest pairs to learn are gold, US dollar CAD, the dollar index, US dollar rand, and the euro rand. Those are about 5 of the easiest pairs to learn. And then add the pounds because they're the most profitable. And while you are learning, it's important to have good records. So what's your win rate per currencies that you're trading? Are you doing better in certain currency pairs than others? Um, which strategy does better on which currency pairs? Which strategy works better on what time frames, and you should generally have good records. But say you're a beginner, for example, my watch list, I don't trade every single currency pair. There's a euro rand here, there's New Zealand US dollar, there's US dollar MXN, there's euro odd, euro New Zealand, so there's a bit of euro there, just no euro USD. There's pound Australian dollar, pound New Zealand, US dollar rand, and gold, and a bit of oil and US dollar CAD. I don't trade US dollar CAD, but I just put it there so people could see the charts. So I wanted to just show you why gold is the first one I picked. And the reason why I picked it is because gold has a tendency to follow support and resistance better than other currency pairs. So obviously, since it's gold, you're going to want to reduce your risk. That means cutting your position size when you're trading gold, obviously, because it's a more expensive commodity or metal, so you want to cut your risk. Silver is not as easy to learn, so I didn't put it on the list. Another easy one is the US dollar rand, and why this one's a bit easier is because it has beautiful trends. It tends to follow trends better than the other currency pairs, as you can see. So for those learning trend systems, it's quite simple, right? Especially if you're learning support and resistance trend trading, it's quite simple to learn. This is the US dollar CAD, and this is mainly because of swing traders. US dollar CAD, if you're a swing trader, it's probably the easiest pair. Not all US dollar pairs are easily tradable. I'll tell you that US dollar franc is always confusing. It's just mud. It's just mud and water. I'll tell you that. And yeah, but US dollar CAD, I've always loved it for the beautiful swings that it makes. And for me, it was one of the easiest pairs I started learning off because of the beautiful swings that it made. And it also respects support and resistance better than the other currency pairs. So US dollar CAD is definitely on top of the list. And then dollar index. So the dollar index also it also follows swings much better than most other indices. So if before you go into Nasdaq and S&P 500, try the dollar index. I see a lot of people avoid the dollar index and they go to Nas, which is very, very difficult to trade. Whereas as you can see, this one respects swing trading and support and resistance better than most currency pairs, in fact. And it's not fast paced. It closes, so at least it doesn't change overnight, and it closes during the day, especially for people who have jobs. It's definitely a good indice to practice your strategy on. And that's pretty much it. So first of all, cut down your list like this, right? Have your list which you're testing and you're back testing on your own strategy. And once you have your own strategy that you're testing out, then obviously you know which pairs to start cutting out, which pairs to keep onto your list and things like that. And let me see if I can just share something else with you. Right, I want to share something which is also important for you to note. Yes, when you're beginning to trade, you should also understand what correlations are, especially if you're going to make like your trading list of the pairs you're going to trade. You want a good list which has a bit of a mixture of a lot of pairs, but not too much. Just have, say, 10 pairs which you think you can do well with. Sometimes 7 is even good. So no pairs trade completely independent of others. This was the article I wrote, I think, in like second year, 2017, when I started trading. So what it essentially does on this list is that you don't want to be trading against yourself, right? And what does that mean? It means that there's certain pairs that are positively correlated to each other. So example, the euro US dollar. The euro US dollar and the pound US dollar are positively correlated. As you can see, there's 0.95 correlation. A perfect correlation is 1, like here, 1. So a 0.95 correlation is close to perfect. So that means if you're going to buy the euro US dollar, on your trades, you shouldn't be selling the pound US dollar. Either your analysis is wrong on one of the pairs or something's terribly wrong. But basically, they move together. That's what a perfect correlation means. That if we track the euro US dollar in 1 month, 3 month, 6 months, 1 year, we'll find that it moves in the perfect direction of the pound US dollar. Now, if we look at the US dollar franc and the euro US dollar, we'll see that over a year's period, over 1 month, over 6 months, euro USD does the complete opposite to the US dollar franc. Meaning, if you're buying the US dollar franc, you should not be buying the euro CAD, euro US dollar. You should be doing the complete opposite, right? Here's another example. Say New Zealand US dollar. It's positively correlated to the Australian US dollar. So if you're buying the Australian US dollar, you shouldn't be selling the New Zealand US dollar, right? Just giving you a bit of an idea of what it means to be correlated. Because a lot of the times I've seen when I also started out, I noticed something interesting. I would place trades, and then I would see that sometimes a buy sell and a buy and a sell were moving together, which means as one trade was doing well, one was doing terribly. And it's like they were moving in opposite directions at the same time. And that's when I started to investigate a little bit more about correlations and making tables for myself and preventing correlations. So for example, another correlation, just pound US dollar has a negative correlation, nearly perfect correlation. So you're aiming for minus 0.95 or positive 0.95. So pound US dollar has a nearly perfect negative correlation with the US dollar franc, meaning if you're buying the US dollar franc, you shouldn't be selling, you should be selling the pound US dollar, right? And that just makes sense because if the US dollar is weakening, then obviously the pound will also be weak. If the US dollar is getting stronger and you're buying the US dollar franc, then obviously the pound US dollar will drop because it's pound against the US dollar. So they make sense. Correlation tables make sense. And obviously you can make your own correlation tables on my FX books. I would have showed you my the table I currently use, but I don't know where I put it. So my FX book, you can create your own personal correlation tables. You need to keep updating them, possibly in 6 to 8 month period intervals, where you basically just update your correlations because they do change. They're not going to stay the same way they were 30 years ago. And again, on the easy currency pairs, I wanted to show you something else. On these pairs that you see, I picked them strategically because, first of all, like I said, it's easier for me. Those are the ones that I do better on. Those are the ones that I've seen I understand better. For example, if you're in South Africa, I think you understand the rand a little bit better than someone who's a foreigner of the country. If you're in the US, you understand the US dollar and gold and the dollar index a little bit better. And also testing your strategies is very important and things like that. Is there anything else? Volatility is also important. A lot of these pairs that I've picked are very volatile. So they move very violently. And that's not to say it's a bad thing. It's just what I've chosen so that I can reduce my position size. You can obviously pick the traditional Euro, US dollars, pound, CAD, and things like that. But be aware that as you want to make more money, you'll find that you're going to have to increase your position size drastically. I remember there was a point where I had to trade like 100 lots just to make the amount of money that you need to in order to grow your account. So be very careful when you're going to trade, how to grow accounts. As your accounts grow bigger, you may want to switch to more volatile pairs which aren't so liquid. So that will mean you're turning against the traditional pairs and things like that.